Hey everyone, it's Manny with another topic to talk about. Today we're going to talk about the loan estimate. Remember to like, subscribe, and tell your friends, especially those that are in the market for a home. So let's get right to it. So the loan estimate. What is a loan estimate? So a loan estimate is a presentation of the mortgage terms, estimated cost, potential financial commitments associated with the loan. So it does provide transparency and allow you the opportunity to make an educated decision when it comes to shopping around for a mortgage. So typically you're going to get this when you request it. So if you're shopping around for a mortgage and you're like, hey, lender, can I get a loan estimate? They will provide it to you. Typically it'll come in the form of a fee sheet, which looks a little different than a loan estimate, but that's okay. They should mirror each other pretty well. And then you'll also get it when all of the parts and pieces of the loan app are completed. And for example, you're under contract, you're looking to lock in a rate. Once the lender gets the contract, locks in a rate, at that point they will provide you with a loan estimate. It's a federal requirement. There's a certain amount of time. I want to say 3 days that they have to provide it to you. Let's see. So the important stuff, I want to get this stuff out up front. Make this a lot easier. So Section A, that's typically what I get asked about a lot when people are shopping around for a mortgage. They want to know what I am providing or what I am charging, and a lot of it's going to be, I'd say all of it's going to be in Section A as to what each lender is trying to charge you for that mortgage. Section B, these days telling people to pay attention for excess fees associated with that. More and more lenders are putting more fees in Section B. So when you're comparing loan estimates, take a look and see what each one is saying as to what fees are in Section B. But Section A is definitely going to be the big one. Section C through H should be the same across all lenders. You shouldn't see any major differences. So let's see what we've got. And this is what I'm talking about in Section A. So up here, Section A, I just put in some, fake fees in here. So like an administrative fee, an underwriting fee, a processing fee. And then this part up here that says percentage of loan amount in points, that's if you're paying points. So if you're paying a point for that rate, you'll typically see 1% of loan amount. If you're paying 2 points, it'll be 2% of the loan amount. And that's what you're getting charged. And then you'll have a dollar amount associated on the side. Like I said, Section B, just kind of keep an eye out, but across all lenders, it should be relatively the same in there. And then Section C through H should all be the same across all lenders. And that's important because when it comes to a loan estimate, keep in mind it's only an estimate at the beginning phases. When you go under contract, at that point a title company will be picked, and then that's what will change the title fees that are in the estimate. So like right here, services that you can shop for, title company will be in there, but generally the realtor, you working with them, they'll choose the best title company or a title company in the local area that they feel is good. Let's see. So along with that, important stuff, like I said, I get asked from time to time about a loan estimate, and then I'll provide it, and then I'll start getting asked questions about it. Or after I lock somebody and our disclosures team sends out the loan estimate, they'll reach out to me and start asking me questions about what's on the loan estimate itself. And like I said before, I tell people to really key on Section A. And then depending on which part of the process we're in will depend on if you get the initial loan estimate, or if you're getting an updated loan estimate, or if we're later on in the process, you should start getting your closing disclosures, which is similar to the loan estimate as well. My recommendation when you're shopping around for a mortgage is early in the process, reach out to the lenders that you're thinking about using. So find 3 lenders, and you can ask them like, hey, based on today's rates, what interest rate could you give me? And that will kind of give you an idea. So ask 3 lenders on the same day for quotes, and then ask them for a loan estimate or a fee sheet. and get all of that data, and then sit it in front of you and take a look and see, lender A, B, and C, what rate they offered me, what fees they're charging, and then just kind of keep that in mind as to who you're thinking about working with. And then later on, when you go under contract, I would say ask all three lenders again for a quote, like, hey, I'm under contract, can you give me a rate quote? And then see if it matches up with what they originally gave you, as in, lender A quoted me 6.5%, lender B quoted me 6.75%, lender C quoted me 7%. See if the spread between lenders is still about the same. And then, choose a lender. It could be based on personality, who you think you would work well with, who you like. There's all kinds of various factors. And the obvious one is who's giving you the cheapest rate and charging you the least amount of fees. But it doesn't always mean that is the best lender to go with, but it can be. So it really comes down to you. Let's see. So, all right. The main stuff is taken care of. I want to emphasize again that Section A is the big one, so pay attention there. The rest of this is more generic, what a loan estimate is. So the first portion is the lender information. So for example, here it's Trident Home Loans, and it's highlighted in here as to their information, where they're at. Then the next section is going to be borrower information. So this is your information, the property that you're looking at buying, and it even has a sales price in there to make it simple. Then over here, it's going to be the loan terms. So paying attention here, you're looking for a 30-year fixed mortgage, and what type. This one's a VA. Then pay attention in here to see when you're asking for, after you go under contract and you're asking to be locked, when you get that loan estimate, see if it's locked. So it should say yes, how long you're locked for, and then loan terms, this is going to be the total loan amount, the interest rate that you were locked at, and then what your monthly payment is looking like. Projected payments, this will break it down as to what your monthly payments are looking like. So this one's kind of cool as an example because this one's showing a 2-1 buy down. I have another 2-1 buy down video if you want to take a look at it. So here, based on the 6.75% interest rate, they're looking at paying a monthly payment of $4,818, right? But because of the 2-1 buy down, the first year it's as if they're paying a 4.75% interest rate. And so for the first year, their mortgage payment is going to be $39.05. And then the second year, their mortgage payment is going to be $42.53. And then year 3, it goes to normal, which is the $46.18. In this case, it shows, all of their taxes and insurance wrapped up, $975 a month. Costs at closing, pay attention here to see what your total closing costs are going to be. In this case, it's $35,000, and then what your estimated cash to close is going to be. So this is what you need to bring to the table at closing. Let's see, loan costs. This is loan costs associated with the loan. Has it in there, other costs. So let me show you and go to the fee sheet itself. So this is the fee sheet that we were looking at, and once again, here's Section A. This is the big part that you need to pay attention to right here. I would say that that's the most important thing when you're shopping around for a lender, to see what they are charging you. Compare that across 3 lenders. I would say 3 lenders is a good number. From what I've seen, people that use more tend to get a little bit overwhelmed. Like I said, services that you can shop for or you cannot shop for, typically, like for example, the VA funding fee. You can't go shopping around for a VA funding fee, or an appraisal fee, appraisal report, that's handled by your lender. Services that you can shop for, that's going to be, your title company, but typically, like I said, that's chosen when you go under contract. Making sure over here, so little things, calculating cash to close. This is For example, how much earnest money that they ended up putting down, seller credits based on the contract, how much the seller concessions, how much they gave them towards closing costs and buy downs, and then in total estimated cash to close, how much they are looking to bring to the table. Another tip that I tell people is to try to maximize the amount of seller concessions, but that all depends on the market. In this case, it ended up working out really good because they ended up getting the maximum VA allowed seller concessions, which was 4%. And in that case, we're able to maximize it for a 2-1 buy down and then hopefully cover all of their closing costs associated with the loan. So at the end of the day, hoping that in this case they're walking away with a house and then not having to pay any money to get into the deal at the end of it, when it's all said and done. Well, that's about all I have on loan estimate stuff. Once again, if you guys have any questions or want me to go in depth into anything else associated with like loan estimate, reach out, or any other videos that you think I should make when it comes to buying a home. I'm looking for ideas. And then just give me any feedback, like how I can make these videos better, more presentable, easier to listen to. I'd appreciate that too. And once again, like, subscribe, anything that, I don't exactly know what that does, but people say it all the time, so help me out.